stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks. I'm Tracey Ryniec, and I'm joined at the chairs by Kevin Cook. And we have some interesting stocks for you, two large caps. One is hitting new all-time highs, as is the other. And what is the difference between the two? There are some big differences. We're going to start first with Kevin. Your pick is the one that everybody's talking about now, Tesla.
Yes. Above $500. Should you buy it here? I'm going to go over the rationale of why you might consider buying it here. Okay. Let's go to the hard numbers first. This is a snapshot of Zacks' detailed estimates page showing sales estimates on top, earnings estimates on the bottom. If you go all the way over to the right-hand columns for the full year, just go to 2020 because that's where we are. They're going to hit $30 billion in revenue. You can see at the top there, and that would represent 24% growth. Then let's look at the lower pane, the earnings. If you see that the current year, 2019, earnings launched, right? I mean, they turned on, the profitability lever, so to speak. And look how that carries into 2020, all the way over bottom right corner.
That high estimate. Wow.
Yeah.
$12.
Wow. Yeah. So even basically going from losing a buck a share, or maybe they lose 10 cents for this full year, to up above $6 is just a dramatic. Turning on a profit. And you remember last quarter was a big beat. It surprised everybody. It was like they were going to lose 15 cents and they made $1.85.
Right.
So that's really when the stock, remember in the summer, the stock had gone down back below 200.
Yeah.
Lots of people sold thinking it was over.
Looked like a value to me.
And then they come in here with this quarter that's unbelievable, opening a factory in Shanghai, selling cars in Europe, and off to the races now. So another pane in the detailed estimates, just showing on the top you can see the number of analysts that agreed in raising estimates. So most covering analysts that we have, between 7 and 8, were raising estimates for this year and for next year after that big quarter. And down at the bottom you can see, 90 days ago, this year was looking at a loss of $3, and now it's almost flat. And then you see next year rising from $4.90 to $6.28. All right, I want to show you the price chart. This is a 5-year price chart. It's a weekly price chart, just to show you different phases of this stock that I am familiar with as an investor, as a trader. So if you look at the first phase in the second half of 2016, or the second half of 2015 rather, through 2016, that first green square, the stock, is flipping back and forth across 200. I wanted to be short because that's what, towards the end of that, I think in 2017 is when Elon Musk bought his solar company.
Okay.
And that to me looked like a bailout, but I called it a bail-in because he bought and rescued his own flailing solar company. Now I know that the grand vision is that he's creating an energy company that's, it's got all the moving parts to be a self-contained energy company. But I thought, wow, he's bailing that in. I mean, does he really have to do that? Does he really have to spend $2.5 billion to do that and bail out his brother and that kind of thing? It just seemed fishy to me. Yeah. I was buying puts then thinking, it's going to stay below 200. And then 2017 was a different story.
Yeah. And
they did start, the sales started to climb. He started to meet the promises of, I'm going to be able to make, 3,000 cars a month, 5,000 cars a month, that kind of thing. And, he was pulling that off. But then through that 2017 into 2019, I said, basically you just trade that range.
Right.
It's not going up. It's not going higher than 350. Sell it at 350. Buy it at 250. Well, all that changed this year. That stock broke out above 350, and that's why you're seeing this massive surge. It's taking out the shorts. So that's kind of the story. But what else is driving it? Did you hear this prediction from Catherine Wood, who is the CEO of ARK Invest? you know, those ETFs, ARK innovation funds. She just raised her price target from 4,000 to 6,000 on Tesla shares.
Okay.
And her primary rationale is robo-taxis. That Tesla is going to go into Uber's business and do it better than Uber eventually. So that's a 5-year price target, $6,000.
Okay.
And that, you know, autonomous driving is coming, ride hailing is already here, and people just want to call up and have a robo-taxi take them wherever, and that Tesla will dominate that business because they can do it with 80% gross margins. That's what Catherine.
80%.
That's what she says.
Okay. Wow.
So I don't know if she's right, but you look at the valuation of Uber. Uber's, you know, private. It's private, but its market cap is like 60 billion. Obviously, investors think something's going on there in, you know, not just ride hailing, but eventually autonomous driving. All right, I don't know about that. Here's what I do know about. Elon Musk is still a great visionary, and he surrounds himself with the best engineers. We got more proof yesterday when his space company, SpaceX, did another launch at Cape Canaveral, testing the Crew Dragon, the crew capsule, for emergency abort, right?
Okay.
So they launched the Falcon rocket with a crew capsule on the head, and then they separate after about a minute, and the rocket separates and blows up, and the crew capsule Dragon has its own rockets, and it gets away. It gets away from that explosion and lands safely. So here he is proving to NASA, yes, we're ready for your astronauts. We've verified the safety of this. So that's just an example, I think, of how Musk surrounds himself with the best engineers. So any problem he's got coming with the cars, with the batteries, with solar, with China, with Europe, he's going to figure it out.
How much of this stock move has been helped by the fact that he's no longer on Twitter tweeting things and getting in trouble with the SEC?
I think a lot because, yeah, I mean, what was it, even a year ago, he's smoking on Joe Rogan's show, driving across country, ranting like he's...
That seems to have stopped now.
Yeah, so whatever crisis he was having, he's either gotten it contained, or he just doesn't advertise it as much. So yeah, we don't need a crazy CEO. We need a visionary CEO, but not one who could be unstable.
Okay, now for investors who aren't yet in and the stock is surging like this, should they be waiting on the sidelines for if or when there is like a stumble one of these quarters where the numbers just aren't as good?
I mean,
and then
you
get in?
Definitely want to be ready for that day.
Okay.
You know, when this stock has a 20% down day because of some screw up, you want to be a buyer then.
Okay.
In the meantime, you could buy leap options, you know, long-term call options going out 2 years. And then look for any dips back into the 400s. I think that 350 will be support because it was resistance. 350 to 400 was resistance for so long, it'll be support.
Okay.
All right?
All right. So that's the Tesla story. It's good to look at the actual numbers and see what's happening with those estimates because that's a huge story.
Yeah, and I want to say one other thing is Tesla, like the head of Volkswagen said, Tesla is not just a car company, it's a technology company.
Right.
And I mean, look at GM or Ford. I mean, I own an American-made vehicle that I'm not that crazy about the quality. And it seems like, yeah, they've got a bunch of bells and whistles, but the cost cutting is so extreme for those companies that little bits of quality get sacrificed. And I don't see Elon Musk sacrificing quality. He'll just raise his price.
Right.
Whereas the American auto companies may not have that much pricing power.
What are they looking for in China? I don't know if you know what they actually are looking for over there, but the auto sales have been down 18 out of the last 19 months, and now they're going to be launching or trying to sell more of their own cars there. How's
well,
that?
I mean, anybody who's in the car business has to have a longer view than 18 months. They have to look past a recession.
Right.
They're looking at 1.3 billion people. What are they driving now? What do they want? I mean, China's got a pollution problem.
Right.
And China does have other electric car manufacturers, but for that middle to upper middle class, they want the Tesla, right?
Yeah.
So that's a long-term bet for him. That's like we're going to realize the fruits of this 10 years out.
Okay.
Yeah.
All right, I brought a stock that's on the more sedate side. JP Morgan, they just reported earnings and they kind of lead off the earnings season now. I brought the chart because 2018 wasn't so great for the stock because, you know, the Fed was raising rates initially, then they started to cut, then everything sold off at the end of 2018, including these shares. That was a real buying opportunity there. And then once the Fed, well, they were raising, then now they're cutting, and that's, even though that isn't great for most banks to have those lower interest rates, still it's putting some wind behind the economy there, and that's going to help a big bank like JP Morgan. And JP Morgan just has a solid management. It has Jamie Dimon, who's been in there since the financial crisis. He knows every niche and cranny of that bank. An interesting thing about this quarter was that they really surprised on the trading revenue, and none of the analysts had any idea it was going to be that good. Jamie had tried to kind of foreshadow it by telling them about a month before that it was significant for the quarter, but it like blew it out. So it's unclear if they're going to be able to do that kind of performance every quarter here in 2020. If they're even going to reproduce it at all again, we'll see. But all their other divisions are pretty stable here, given the low rates, which don't help banks. But since they're bigger and they have these investment arms and trading and all these other things, they have different ways to make their money. So shares still getting a little bit of a boost here off of this earnings report, even though they've had the big gains over the last year. It's trading only at 12.9 times. But for the big banks, that is on the higher end. So some of the analysts have been a little more cautious here, saying that they've moved to the sidelines a little bit, waiting for a pullback in the shares. But it's still the premier bank.
Would you say that the big banks, they can get by, if there's not a big net interest margin spread, they can get by because number one, they have leverage.
Right.
And then they have all these diverse businesses, as you said. Whereas the regional banks, they need that net interest margin.
Yes, the same with the small banks. That's why the big banks are still pretty attractive here. And with the economy, muddling through and looking fairly decent here, that's a good sign for this bank too. Also, just globally, it's not real bad out there globally either.
Well, they can do wealth management around the world too.
Yeah. So I did want to bring what the earnings growth is looking like over the last 5 years. It's a little bit in contrast to what Tesla's would look like here. For the old mainline type of company, very consistent. And then you can see for this year and next year, a little bit of an uptick in both of those. As the analysts are getting more bullish, they all have raised their consensus earnings for this year and next year, and you have a Zacks Ranked number 2 on it now. It was a 1 briefly there after the earnings report, now a 2, which is the buy. And you're just getting, very consistent, and that's what you would expect from one of these big banks. And JP Morgan is still the premier of the big four. So I'm going with what's working. I do own this in my value investor portfolio for the last year and a half or so. So, I like the banks here in general.
Go big.
Yeah. Okay, so 2 different companies, but their charts looking at least kind of similar with these breakouts. And every week we're going to be bringing you more great stocks. So you want to be sure to tune in. Go to Zacks.com/YouTube to see all of our top stock picks of the week videos. And we'll be back again next week with some more stocks.